Well, it could be pivotal moments here in the steel industry. The United States Steel Corp stock soaring in pre-market trading. The climb higher pegged on news that the steel company rejected a $7.3 billion buyout proposal from rival Cleveland-Cliffs and is exploring strategic alternatives after receiving multiple unsolicited offers from organizations looking to invest in or take over the steel maker. U.S. Steel has been rocky given the political volatility in the sector, with former President Donald Trump imposing tariffs on steel imports to fight Chinese domination in the space. Now President Biden has kept steel in focus, promising U.S. steelworkers he would levy tariffs on steel imports. So where are we now? Joining us now, we've got Yahoo Finance senior columnist Rick Newman, who's tracked all the steel movements across administrations for the past several years here. Rick, what do we know?
I guess the backdrop to keep in mind here is we've seen a long-term decline in the U.S. Steel industry, just as we have seen a long-term decline in manufacturing overall in the United States. Most steel in the world is now made in China, and that steel is a lot cheaper. Chinese manufacturers benefit from government subsidies and other things that the United States and others have said violate free trade rules, and there actually are a lot of what you might call sanctions in place on the use of Chinese steel here in the United States. So President Trump tried to solve this problem by imposing tariffs on the import of steel and also aluminum, not just from China, but from many other countries in the world. And President Biden actually repealed those tariffs in 2021 against Europe and other allies. So Trump put tariffs in place on imported steel and aluminum that came from allied countries, think Europe mainly, and Biden repealed those. But none of that, I don't think, is really changing the underlying problem, which is we just got a long-term decline in the U.S. steel industry. It's no longer the global place people go for steel products or raw steel products in the world. And that's why we're seeing this consolidation. So Biden wants to boost this industry. The main way he wants to do it, unlike tariffs, is to say, for all the infrastructure spending, the U.S. government spending, and also to qualify for some tax incentives in some of the laws Biden has signed since he came into office, that steel has to be made in the United States. But the catch is that that makes it more expensive. It just happens to be the fact that American-made manufacturing products, whether it's raw components or finished products, just tend to be more expensive than a lot of imports. So guess what that affects? Inflation. So we're at the very beginning of all these incentives rolling out and this infrastructure spending. We'll see how this all plays out. But I think the net outcome is we're never going to see the kind of revival in the U.S. steel industry that both Biden and Trump would like to see.
I mean, it's interesting in reading about this potential deal, Rick, and we were just showing all the steel makers up there, Cleveland-Cliffs as a potential acquirer, even though U.S. Steel has rebuffed the first offer, at least, its shares are rising, too. And what I gather is that U.S. Steel and Cleveland-Cliffs have their steelmaking is not as sort of technologically advanced as that of Steel Dynamics and Nucor. And so presumably investors are thinking maybe it would make more sense for them to get together, because in addition to everything else that you're talking about, the cost of steelmaking, just like for everything, the cost for them is also going up. So you have to think that would affect the dynamics and the motivations of whether we would see consolidation here.
Right. Costs going up to include the cost of labor. I mean, right. With everything involving any type of consolidation or almost any industry's growth prospects now depends on, can you get the workers? So you're right. Usually in deals like this, the acquirer's stock goes down and the acquiree's stock goes up because they're going to get a premium over the market price. But I guess the market is saying that overall it thinks consolidation in the U.S. steel industry would be good. Probably one of the reasons is, I mean, there is a sort of advanced manufacturing component to U.S. steel. So when you build new steel factories these days, they're much smaller than the mega plants of, the 1950s and 1960s. They're more efficient. They use modern techniques, and they're just they're just better. They're better performers. So I guess the idea is this would add efficiencies for whatever this new conglomerate would be if this deal actually happens. We have 4 steel manufacturers in the United States now, so this would bring it down to 3. And I suppose there might be antitrust considerations here as well. So The Obama administration would probably have to bless this, and they've been pretty tough about mashups like this. So that is another factor to keep in mind.
Rick, just lastly, while we have you, you'd mentioned wages a moment ago, and this has been almost essentially the year of the union negotiations that have played out in front of our eyes. So with regard to the union relations that U.S. Steel has, how much has that played a role within some of its own trajectory right now?
Well, Wall Street doesn't like high labor costs. That's why, as a general rule of thumb, anytime a company can get its labor costs down, Wall Street likes that. And that is a thing that can push a stock price up. Biden is pushing in the exactly opposite direction. He wants more union jobs in the United States. It's no secret why. I mean, he's actually quite similar to Trump in that regard. I mean, part of what Trump wanted to do to rebuild the middle class was reinvigorate these manufacturing industries, including more union jobs. However, union jobs cost more, and that just pushes up costs. So with regard to all the reshoring of supply chains, the trade-off here, assuming this actually happens, is we are going to have higher cost production in the United States. The more of those jobs, the more that production comes back to the United States, the higher costs are going to be. And you can argue, well, that's a good trade-off. It's better to have those jobs here in the United States. It's better to have those important supply chains here at home domestically. But that is inflationary. So in the broad picture, there are a lot of economists who think we're not going back to 2% inflation, and this is one of the reasons.
Rick, thank you. Appreciate it.
Bye, guys.